Well, it was a calm after the storm as the market mostly meandered today, but the Dow Jones Industrial Average was able to edge up higher to yet another all-time high. Now, the market is dealing with this sort of whirlwind Trump rally. It's also dealing with the earnings season. We're in the middle of that right now. But I will tell you there are three stocks I want to single out that stand out to me this week and speak to the fact that America is on the move and Americans are becoming more engaged and they're spending money. And the good news is they're spending money on stuff they don't need, but they want because we're Americans. Check out Royal Caribbean. Was in serious trouble. You know this. They had a series of problems, a string of self-induced mistakes, mostly at sea. Well, this stock is up 40% in the last 3 months, 13% in the past weekend. Well, management today saying that they are absolutely pumped because consumers feel more confident globally and they're spending more money. Then there's Packaging Corporation of America. Now, back in the day, astute investors always paid close attention to demand for corrugated boxes. It was a predictor of whether the economy was going to do. And I got to tell you, it still works out pretty well today. Now, one of the problems is there have been so many mergers in the industry, it's hard to find a pure play. But this is the fourth largest player in the industry. They've got 90 corrugated product plants in 30 states, 6 containerboard mills. Stock was up 16% over the last 3 months. It's exploded for 10% in the last 5 sessions. And finally, Sherwin-Williams. Now, you guys know I've mentioned this stock many times over the last couple of years. In fact, most recently on December 21st, along with Toll Brothers and Whirlpool. Now, Whirlpool got hammered. I'm out of it, but the most important thing with Whirlpool, too much Latin American exposure. Sherwin-Williams, on the other hand, had another record year. They're completing a merger with paint maker Valspar. The stock gaining some traction. It's up 23% in the last 3 months, and it's on a cusp of a major breakout. Now, after the close, there were a lot of earnings from some big names. Google, Alphabet, they missed for the second time in 4 quarters. Stock slightly lower. I think long-term investors, to be honest, become accustomed to these periodic potholes. Microsoft beat the street, again, driven by that cloud business, sending its shares slightly higher. I thought they would be higher maybe by the morning. Starbucks missed again. This company, of course, continues to struggle trying to refresh that brand in its shares. Wynn Casinos, this is interesting because they had a big miss and the shares are soaring. I don't have the details, but it is a completely different reaction than Las Vegas Sands, which got hammered today on an earnings miss. These are all exciting times, and I want you to also make sure, as you're building your portfolio, keep it American-centric. That's got to be the tone. By the way, last night I mentioned to Shelby Holloway why so many young kids aren't in the stock market. Well, because they're spending their money on things like deadmau5 tickets. Well, deadmau5 himself had some input on that. He tweeted us, well, from my endpoint, I consider it an investment of sorts, just more on the junk bond side. Guy's got a great sense of humor. That's what happens when you make $21 million a year DJing.